Hello, everyone, and welcome to another edition of the Forex Market Update. What we are looking at right here is a chart of the US dollar index. And last week we spoke about the importance of this resistance area near the 84.75 level. So the market is now testing resistance at around 84.75 up to around 84.90. So we'll see if the market can close above this level on a weekly basis. So that's what we're taking a look at in terms of the dollar index. Looking at the other markets, we see that the euro declined slightly last week. Actually, the high last week was 129.95 and the low was 128.28, and it closed at about 128.29. So it closed at the lows last week, and the market really is attempting to break lower, but I think folks are watching that all important level on the US dollar index before attempting new shorts in the euro. The British pound last week, the pound gained slightly. The market was very choppy going into that vote for the Scottish independence, but the market was erratic, and I advise folks that probably staying out of the pound and all pound pairs was probably a good thing to do, especially if you were a day trader, because you will see that the market was pretty erratic last week. Okay, taking a look now at the Canadian dollar, we see an opportunity with the Canadian dollar that the market has broken out or is attempting to break out of this triangle. As you can see here, the market broke above the triangle, came back down, retest the area of support. Age-old rule in technical analysis is that support or resistance, then comes support. So this line was acting as resistance. The market broke the line, came back down and tested the region, and is now acting as support. So to confirm that this area around the 109 level is support, and the market has actually bounced off support, the market will have to take out this 110 high. So that's what we're looking for in the Canadian dollar, to see if the market has the strength to take out this high at 111. So we'll be keeping an eye out on that for this week. Support comes in at 108, this previous low, and at 107.50, this trend line, and at 106.15, this previous low. So those are the support areas. Resistance is at 111 and ultimately up near the 112.86 high. So that's what we're keeping an eye out on for the Canadian dollar. Taking a look at the gold market, we see that the market is continuing down steadily. This is a weekly chart. The market declined last week and is in a downtrend for all intents and purposes. So this market is in a downtrend, and what I suspect is that the market is going to make an attempt at these lows near the 180 level. We see that this 180 level is critical support that has supported the market since June of 2013. So this is June 2013 here. Market bounced off of this level, bounced again in December and January 2014, and now the market is coming down again to test this level. To confirm a breakout of this level, what you would want to see is a weekly close, a close below 111.80 on the weekly time frame. That will then confirm that the market has broken down. What you'll be looking for in gold is a break below this 111.80 level on the weekly basis. So you'd want the market to close. Remember, it's very important to look for a close below this 11.80 level on the weekly time frame. If the market does close below that, we will look to see if the market then confirms a breakout with further losses. If that does happen, you could see a pretty significant decline in gold down to the 1100 or even the 1000 level. So we'll keep an eye on the gold market. Taking a quick look at the S&P 500, the movements have been very shallow, and the market is still staying above the new high that was made. And this is the chart of the SPY, which is the ETF that tracks the S&P 500. So we could essentially look for support down at 198 and down at 190. So those are the support areas we are looking for with this market. Thank you for listening. My name is Beyond Dale. I hope you have a good trading week.